What's up everyone, it's Caddy with Money Investing. In this video we are going to be talking about one stock that dropped a little bit over 18%. It's actually one of my favorite companies right now, and even after the 18% drop, it is still trading at a little bit of a higher valuation, but it's a good starting point because this stock has never, I shouldn't say never, but it's not really dropped over 18 to 20% in a very long time, or you don't see that very often for this type of stock to drop over 18-20%. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you want to join our money investing community. The first week of the month is the best time to join. You get access to all the buy and sell alerts, options alerts, trade ideas, a lot of benefits, including the intrinsic value spreadsheets where we are keeping track of our watch list and our fair values meaning our buy targets, if you want to get access to that as well. And of course, members only private videos, so all the links are going to be down below. We'd love to have you on board. So the company that we are talking about today is going to be Fortinet, and Fortinet is down a little bit over, like I said, 18% pre-market, 17% right now, dropping down to $62 per share. And again, if you take a look at the history of the charts, if you go over to the daily chart here, you don't really see a lot of gap downs. Sometimes you have basically seen Fortinet sell off quite aggressively. So 16% down day back in August of last year. This right here was a down day of over 13%. And then if you come back here, this right here was down over 13%. So again, it's been around 13, 15, 16%, but today it is down a little bit over 17.5, almost 18%. Right now after the earnings were released. And Fortinet, as you guys know, is at the top of my list when it comes to cybersecurity. So this is a company that I have been eyeing for a very long time, and I do really want to own the shares of Fortinet over the long term. But we'll talk a little bit about the fundamentals and of course the valuation as well. So the main reason for the sell-off was the cut in the annual revenue forecast from the company. So they did beat on EPS, they slightly missed on revenue. We'll get to that in just a minute, but they did cut their annual revenue forecast on Thursday as spending from enterprise clients remained tight amid a turbulent economy, and sending its shares obviously down over 17% after the bell. And Fortinet now expects annual revenue between $5.35 and $5.45 billion compared to the prior number of $5.43 to $5.49 billion. So we're getting a little bit of a softer guide, and that's one of the only reason the stock is obviously selling off here. And stubborn inflation and rising borrowing costs have made companies cut back on their IT spending. And as customers shift to the more long-term investments, Fortinet's near-term revenue growth continues to take a hit, while it also faces tough competition from bigger rivals like Palo Alto Networks. That's their only biggest rival. Every other company here is smaller than Fortinet, but Palo Alto Networks also not profitable, right? So if you come over to PANW, this is also a company that's actually on my radar. It's down over 5%, even though they haven't really reported earnings, but they're down because of Fortinet's earnings. And then of course they are generating losses year after year, but they're very close to profitability, right? The last 4 quarters, they have achieved profits on a GAAP basis. So again, the margins are really low, nothing compared to that of Fortinet, but it's got potential, right? It's turning the corner. Year to date, the stock's up like 68% from its lows of back in January. The stock's like, I think, more than doubled. So 120, 130. So it's down up like almost 90% prior to the sell-off today, but it is turning the corner towards profitability. So I would definitely put Palo Alto Networks and Fortinet as like my 2 top stocks in the cybersecurity space that I do really want to own. Fortinet more so than Palo Alto because of the profitability side of those things. And of course, it is incredibly profitable. So billings did grow over 18% to 1.5 billion. Revenue was up 25.5%, right? So much for a contraction, very strong growth. Product revenue is up 18%. We got service revenue up over 30%, which is the highest growth rate that they've achieved, of course, since first quarter 23. But before that, literally last 6 quarters, they haven't really seen over 30% growth. And once again, they're posting a very strong number, over $820 million in just service revenue. When it comes to margins, gross profit margins actually did expand to almost 78%. Again, if you go back to the last 6-8 quarters, not a single quarter they've been able to achieve almost 78% margins. And yet here we are with a gross margin of almost 78%. Operating margins at almost 27%. So again, if you have to go back to fourth quarter 22 to kind of level that, it's a little bit over 32% back then. So definitely a lot higher. But needless to say, very strong margins. And of course, $300 million in operating income, or actually net income, which is obviously higher than the second quarter last year when it was at just under 195 million. So you do 300 divided by 194. We're looking at a growth rate of over 54% for the company, right? So very, very strong growth here coming in on a year-over-year basis. And of course, we do also have the diluted share count at 795 million, which is now lower compared to where they were same time last year. So what do we have here? We've got a company that is consistently growing revenues. We've got a company that's got increasingly growing margins, and of course, the share count is going down. So they have been consistently buying back shares, and of course, not to mention the cash investments and marketable securities sitting at over $3.3 billion. And I think the company's got very little to almost no debt, and they do have a negative net debt. So if you come back over here to the balance sheet statement, so they've got total debt of sitting just under $1 billion. So they can pay off almost all of their debt and still have almost $2 billion worth of cash left over on their balance sheet. This right here is going to be the number of deals the company's done. So number of deals over $1 million, 134, which again is an increase compared to second quarter last year. Number of deals over 500,000, 250,000, 50,000, all of them actually grew on a year-over-year basis, and even on a quarter-over-quarter basis. Over 50,000 did grow quarter-over-quarter. Over $1 million did grow quarter-over-quarter. $500,000 also growth there. The only number that didn't grow quarter-over-quarter was the deals done over $250,000. So 836 is slightly lower than same quarter this year, but of course all of them are higher from same time last year. This is going to be the free cash flows. Free cash flows came in at $438 million after you take the capex minus the operating cash flow, and that's also higher compared to same time last year, which was $283 million. Quarter over quarter is a little bit of a decline, but again, year over year, very strong growth there from the company as well. And this is where the guidance comes in, and this is why the stock obviously is selling off the way it is, because their 2023 guidance, they're expecting billings to grow almost 17%, revenue to be a little bit over 22%, and of course service revenue to be up 28%, and EPS they're expecting between $1.49 and $1.53. So if you do the math, let's just take the mid guidance at $1.50, and right now the stock's trading at a little bit over 62. So we do 62 divided by $1.50. We are still about 41 times earnings, right? So that's one of the reasons why I have not been buying Fortinet, is because of the valuation, right? It's a great company, phenomenal stock, high quality business, but it all comes down to the pricing, the valuation. That's where our focus always is when it comes to execution, when it comes to decision making. Our focus needs to be on valuation. So before this sell-off at 75, it was at 50 times earnings. So we did see it come down from 50 down to 41, but I want it to be at closer to 25 to 30. So in order for us to get down there, obviously it needs to sell off even further. So it's a start. It's definitely a starting point. We'll see if the buyers step in today, and if we do see a green candle at the open, if the buyers step in to push it back higher, or if the selling pressure accelerates, this market kind of understanding the fact that, okay, valuation is a little too high relative to the growth rate, so maybe it needs to be trading a little bit lower, whatever, but it's a starting point. And of course that those moving averages could act as a very strong support for Fortinet, and we also have this support right here sitting roughly at around $60, $59, $60. That's going to be that level to watch. Very, very important level. And of course, it could also end up as a very good swing trading opportunity for Fortinet as well if it ends up at $60, right? $60, $59 could be a good swing trading opportunity, but of course, we're watching closer to sub 40, right? So low 40s and sub 40 is going to be that level to watch for me personally. And let the price come to you, man. Let the price come to you. That's really the overall phenomenon of investing, is be patient, let the price come to you. There's no need to chase. There's no need to start FOMOing in on a stock, even though a little bit of FOMO, is okay. And I've been FOMOing in a little bit on Enphase. But the bottom line is, when you are looking to size up, when you are looking dollar cost average a little bit heavier, let the price come to you. Make a dent on your cost basis. Otherwise, there's no point dollar cost averaging if you're doing it at every dollar, right? The stock drops a little bit, you dollar cost average. Stock drops another dollar cost average. That's not helping anyone, right? You want to be dollar cost averaging when you can actually make an impact on your cost basis. You can dent it down, meaning you can actually bring it down to a point where you can be comfortable with that position. So that's going to be it for today. Let me know your thoughts down in the comment section below. And what do you think about Fortinet? Are you buying, selling, holding? What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is down below. Again, if you want to join our money investing community, the first week of the month is the best time to join. Get access to all the buy and sell alerts, options alerts, trade ideas, all the members only private videos. So always happy investing. I'll see you all in the next video.